Good day folks and welcome to Best Trade Setup. In this video I'll be taking you through the trades from the 19th to the 21st of February 2024. First off, we have buys on the Euro USD, and as usual I'll go through the before and the after, followed by the chart analysis. Unfortunately, the stop loss was taken out, and this was because I didn't notice the confirmed sells in this area. What we have here is a fake out, and with every fake out is an M pattern. This fake out so happens to be in the form of an M pattern. The first leg is a 3 candle pattern and a bearish engulfing candle. So those are 5 confirmations. We need 6 confirmations for us to have valid sells. And the 6th confirmation is this close below the order block, which shows a shift from the bullish bias from earlier on onto a bearish bias. So for us to enter trades moving forward, we need to see a 3 candle pattern or an M pattern at a significant level. Another thing that's very important is price needs to close below the 20 EMA. Then we now know we can now enter the trade. We have our first entry here after the confirmed sells, 3 candle pattern, and then the second entry right here, but it happens in the no trade zone. I can't take any trades in the no trade zone, so I'd have to wait for price to come out of it and then take these sells on the pullback. This also presents a better risk to reward. Next up, we have the 20th of February buys. This is the before. This is the after, where price reaches take profit. Later on in the day, took some more buys. Price eventually reached take profit. I'm going to go through both these trades. First off is this one. This is just a wider view of the charts. This is the second trade that we took for buy. We have a sweep W pattern in the order block area. This is the first leg. The second leg, we have a sweep again, W pattern, 3 candle pattern, and then we have this price action happening also in the order block area, and price closing above the 20 EMA and also closing above the 5-minute order block. We now have a shift from a bearish bias onto a bullish bias. I just have to wait for an entry either in the form of a 3 candle pattern or a W pattern at a significant level, and we do have it right here. So this is the first entry. Then we have this retest again and this retest, which forms a W pattern. So this is another entry for buys. Looking at the second buys, since we have confirmed bullish momentum or bullish bias, we just need a 3 candle pattern at a significant level or a W pattern at a significant level. And we do have that right here, a 3 candle pattern. So the entry for buys is right here. Another entry presents itself again in the form of a 3 candle pattern at this significant level. Moving forward, we also have this entry right here for a 1-to-1. This is a W pattern in trend continuation, where we have the first leg right here, where we have a 3 candle pattern, 5-minute order block, a sweep, and a W pattern. Then we have this bullish candle closing above the 50s level. We also have a 3 candle pattern forming here and also completing the W pattern. Entries right here for a 1-to-1 with the stop loss below here. I had already taken buys, so this trade was not necessary for me to take. It's always important to always limit your trades, always have a set number going into your trading day of how many trades you're going to take. Always have a maximum number in mind. Here we have another trade on the same day on the 20th of February. These are sells. This is the before. The following day, sells again on the 21st of February. Both trades have hit take profit. So what I was looking at to enter these trades is very similar to the charts that I've discussed earlier on. We have this huge fake out. This fake out is in the form of an M pattern. So we already have 3 confirmations here. A fake out, with every fake out is an M pattern, and it's in the form of an M pattern. First leg we have a 3CP. The second leg we have a 3CP and a bearish engulfing candle. We also have this fake out as well, forming an M pattern at the quarter level. Obviously, we can't take sells into an order block. We now need to either see a close below the order block for confirmations of a bearish bias, and we do have that. Price also closes below the 20 EMA. What's left is to see either price is going to form an M pattern or a 3 candle pattern at a significant level, and indeed it does. First entries at this point in time. Moving forward, we do see price going lower, but it doesn't confirm any changes from the bearish bias to the bullish bias. So any trades in this area are valid as long as they give us a minimum of a 1-to-1 risk to reward. The next day, we do have price doing a pullback, still offering us a very good entry position. Also, we do see the initial high in Asian session. We see price going above and closing below it. This is a huge fake out. Also a peak formation high, followed by a consolidation with this bearish candle closing below the consolidation. This is a setup known as a consolidation after peak formation high, indicating that price may go lower. Also, in combination of the things that we've seen, which were confirming a bearish bias. So that's why I entered these trades right here on the pullback. Even further entries could have been entered in this area. Another thing to look at is this area right here where price does go above this level and then comes back down. It's like a huge fake out. You just need to find the right areas that will offer you a risk to reward of at least 1. On the same day, there are buy opportunities. This is the before, and you can see price is just steadily rising. The optimum entry was here. I wasn't around to enter this trade, but price was around the first entry area, so I figured it was still good for me to take this trade and still get a 1-to-1 risk to reward. Later on, price does go down a bit, but also offers another entry. We do have this first leg of a W pattern, and this is the second leg of a W pattern. So it is a valid entry. Price eventually reaches take profit. These are the things that I was looking at for these trades. We do have a fake out, and this fake out, we always have a W pattern. And this fake out is also in the form of a W pattern, where we have the first leg right here forming a 3-candle pattern. We also have 4-pin hammers right here, and 4-pin hammers is always equals to 2 confirmations. This is just an observation that I've made, and this is just how I analyze the charts and come up with my checklist. Price eventually comes back down here. It does offer buys, but this is the no trade zone. So I have to wait for price to get out of the no trade zone and see whether it still gives us a good R&R. And indeed it does. Second entries were around this area. There are other trades that I took moving forward in this area right here, where we have a 3-candle pattern at a significant level. The initial low of the day or the Asian low. If you look at the bigger picture, you can see this is a head and shoulders pattern. So I did enter my trade right here. I also entered another trade in this area as well. You can see that price did go above this level, retested it, continued going up, came back down, and completed a big W pattern. So this is a valid entry. Because there were no valid sells between these two legs, it is valid for me to take these buys based on the fact that this is a W pattern. As compared to the earlier trade, which was at the first of this presentation, where we had confirmed sells here, I couldn't count the first leg and the second leg, so that it forms a W pattern. Every time a trade is confirmed, we don't consider any candlesticks before that in our analysis moving forward. In the next charts, I'm going to show you the trades that I took, but this chart right here explains why I took these buys. Here we have buys that I took, but I didn't actually have a before and after on the trading view because I was away from my computer. Moved stop loss to break even, and price did eventually reach take profit. Here's another trade as well when I mentioned the W pattern that was formed, where we just have a retest here, price went up, came and retested the level again. Price eventually did reach take profit. One thing I always remind myself is that price action will never present itself in a picture perfect way. So I do realize that this W pattern is not the usual one. It's sort of like a complex pullback type of formation. So it's always good to really go back into your charts and study how price action can present itself while maintaining the fundamentals of your analysis, which is a W pattern, because it tapped this level right here twice. Now this brings me to the end of my video. Take from that what you will, and I will catch you on the next one. Cheers.